Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are up 1.8% and we have about 1 hour left in trading. On the 1 hour chart we are currently overbought on the RSI, and on the 4 hour chart we are just approaching overbought RSI. We approach positive MACD, and on the daily chart we made a nice convergence on the daily MACD. However, we are still negative on the MACD, and we also broke resistance. The resistance was this 18-day moving average. We managed to gap up, and now the next possible resistance will be the all-time high that dated back in September 19. So I'll mark that as our next resistance. And at the moment, if we were to reverse and head down lower, the next support will be fairly around the price of $293.30. Reason why: this was where we left off Thursday afternoon when the market closed. Ideally, in order to have a healthy trend or healthy uptrend, we need to close all the gaps overnight. So eventually we'll close that gap between there, and by that time the 9-day moving average should approach to that level as well. So if we were to move on higher, that price movement is roughly around, roughly around 1% to the upside, and if we were to reverse and head down lower, that price movement is roughly 1.6% to the downside. So let's head to the forecast model. On here, I'll go day by day where the S&P 500 will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. This is the current trend, and below it is the trend that I believe is the best match to it. And this dates back to July 24th, 2013 to October 17, 2013. So let me point out why these two charts are similar. So what we have here in the beginning, we averaged above the middle Bollinger Band for several days, and then we proceeded to break down into a down channel, and we made a nice reversal onto touching the upper Bollinger Band right in the middle of the trend. Next, we also see another breakdown to touch the bottom Bollinger Band once more. And then finally, we see a reversion to the mean to touch the middle Bollinger Band right towards the end. So we have those points. Next is the trend in question. So what we have in the beginning, we average above the middle Bollinger Band, or above the middle Bollinger Band for several days. Next, we broke down, averaged below the bottom Bollinger Band for several days as well. And then finally touching the upper Bollinger Band right towards the middle. And then once more we touch the bottom Bollinger Band right there. And then finally revert to the mean, reverting to the middle Bollinger Band right towards the end. So we have about 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points in the current trend. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So this forecast model is available in the next coming weeks. The sign up link is in the description, so feel free to sign up for it. And again, the model that we just examined was July 24th, 2013 to October 17, 2013. Back then, the S&P 500 was up around 1.7%, so we may encounter a new all-time high in the next coming days. So that is it. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.